You hear me now?
You're out of beer. Can you hear me?
I can hear you.
Perfect, bro. How's it going, man?
Oh, not bad, not bad. It's been a long day.
Yeah, you've been working all day?
No, actually, I don't work. I own cocktail bar.
Oh, nice. Are you guys open right now during COVID?
No, no, they
No.
destroyed us this year. It was so bad.
Yeah, it's horrible. I'm sure you're just hanging out now. You don't have much to do at this time. Can you
Yeah,
hear me now?
and I have a lot of yeah, I can hear you. I have a lot of expenses, so yeah, I have a lot of free time on my hands, and I thought I would try something new. And I really enjoy this, so I would like to get better at it and make some more money and spend my free time making money.
Yeah, exactly, bro. Definitely. I mean, that's the same thing I'm doing now. Like this is mostly all my active work. And then, I'm just basically saving so I can start, investing in other stuff like real estate and, other type of ventures along the way. But like right now is perfect time to trade since, nobody's really working. You have a lot of free
Yeah,
time. It's the best time to.
yeah, yeah. Me too. I want to open. I was actually planning on opening two more bars. One was meant to be another cocktail bar in a different town, same in Serbia. Um, and I was going to open a restaurant, but this COVID really killed me. It was unexpected, and I spent a lot of money on just maintaining expenses and paying salaries, and as long as I could. And now it's just end of the year, and it's been a really long year. It
I know.
went fast, but it's been really exhausting.
Oh, I bet. Yeah, this year like flew by. I didn't realize it's December already. Like it seems like the year just flew by. We just didn't pay attention.
In 1 hour, it's my birthday.
Oh, it's your birthday? It's coming up soon?
In 1 hour, exactly after midnight.
Oh, so
Tomorrow
it's
is my
11.
birthday.
Oh, it's 11 over there right now.
Yeah, it's 11.
Oh,
It's
wow.
11.
The time zone's way different out there. Yeah, happy early birthday if I don't catch you.
Oh, thanks, man.
Nice, man.
Hopefully,
Do you
this will
take
better and I'll make some more money from it. That will be my best gift, best birthday gift.
Oh, yeah, definitely. Did you take the trades today? The US 30 we took?
I did, but I moved my stop loss
Too early.
to profit, and it picked me up. It just like took it. I could have made like I play one lot. It's like 1-0, and
Yeah.
made like $40. But if I didn't move my stop loss in profit, I would have easily taken 29 not 80 something, I think it reached.
Yeah, you would have been double. Yeah, me too. It reached like down the middle right here below TP1, and I moved my stop loss because I got scared. Honestly, me too. I got scared because this is a big drop. Like if you saw how it dropped from
Yeah,
up here, it dropped, geez, like almost, 2,200 pips. That's a lot of pips to move in
yeah,
within 10 minutes. So it's probably a safe thing that you moved it just in case because you never know if it's gonna, bounce back.
yeah. I need your help. How do I minimize this zoom so I can see my chart?
Oh yeah,
Do I double click, or
there should be a button somewhere. Are you on a Mac?
I'm actually watching your screen?
Oh, are you let me see, because there's usually a button right here. You can't see my screen because on it's invisible to you, but right here I have my mouse around my screen. There's like a little button there where you can minimize it. Um, it might be on the top right or the top left of your screen because I can't see what your screen looks like, but it should be around. There should be an area around your box where you can minimize it.
Chat, raise hand, leave. Double click. All right, double click. I did it.
Did you get it? Okay, perfect.
Got it. So let me just organize this so I can see you. And all right. So basically, what I have problems with, my main problem is I don't have the eye to catch. How would I say it? The exact moment of entry, the right moment to enter a trade. That's my main problem. I either enter late or too early.
Oh, gotcha. Okay, so which strategy are you applying?
I'm using same like you said, either the New York opening with a signal for US 30 or intraday for all my pairs. I trade only GBP pairs, a few euro pairs, and the rest is gold, US 30, UK 100. That's it.
Gotcha. Okay, cool. So generally, if you're applying the US 30 strategy, like how we were trading it today,
Yeah.
you know how I
So
was watching, basically how I was watching the chart, like it was just moving around basically. I was basically waiting for it to count down. So every time this candle, new candle opens, generally you'll have a little countdown right here on the side. It's not counting down right now because the market is closed, but I
yeah,
have a little timer right here on this side. So every time the candle is going to close, I just wait once it gets close to maybe 1 or 2 minutes, and then I just stare at it, and then I wait for it to close. Like today, when we entered this trade, I was waiting for this candle to close, and I waited, maybe the last 5 seconds, and then once it became, 2 seconds, and it was still the signal was there, then I just
yeah.
hit market order, like a market sell, or if we're entering a buy like we did yesterday, I would just enter a market buy in that direction. That's one way of doing it, and that's probably the best way of doing it, because sometimes if you enter, if you enter too late, price will just drop very fast. It'll drop all the way down here. It's too late to enter. Or if you enter too early, the signal might disappear. So generally, I like to look at it when there's only maybe 1 or 2 minutes left, and then I have my phone ready in my hand because I trade US 30 on my phone. I just have my finger ready there. So when it closes, I just click, sell or buy, so I can enter that trade. So that's how I trade the US 30, because this moves
30.
very fast, like compared to Forex pairs.
I love US 30 because it's fast.
Yeah, me too. I want to make the money quick, because even for this,
Yeah.
we were only in this trade for maybe uh yeah, only like maybe 2 or 3 hours. So basically when we enter this trade, I went to go have breakfast, I went to go walk my dog, and then I come back, and then here we are, full TP.
Profit. Yeah.
Yeah, exactly. And this is why this is my most favorite pair to trade, and especially because it's the most profitable as well. Like one US 30 win, can cover maybe a couple Forex wins. So this week has been great. We had, I think, 4 back-to-back wins. So I made a lot of my profit just from US 30 this week.
Yeah, I've been following you. I actually found you on YouTube by just like researching, and I really like the way you're doing things. You're explaining, you're communicating, you're interacting with everyone, and that's why I signed up for K². And I'm enjoying it. I like it. Before this, I was in another. I don't know if we're live with anyone else or it's just me and you.
Oh yeah, no,
I don't want to
definitely. Yeah.
advertise anyone.
Yeah, no, definitely. Yeah, there's a lot of other trading groups out there, and a lot of them, they give signals, but a lot of them don't really explain what they're doing, or you don't, you can't. It's really hard for people to follow along. But since we
Yeah,
do a live,
basically they were just doing marketing. They just wanted the people to join
sign up.
up, make money. They were doing uh, basically forcing me to do marketing for them and sign up new people, so I would get, I don't know, free membership and things like this. I just want to learn to trade. I don't want to market
Exactly.
it. Like I just want to learn to trade for myself, and that's it. Uh, I have a question here. When you said I understood everything, opening of the New York market, first signal. Now, sometimes it gives a long or short buy or sell, but does the trend meter have anything to do with it, or you're just looking at the position of the candles based on zones, or how do you decide which signal to take or not to take? For example, if it gives a bullish candle with a green signal, would you take it if it was, I don't know, really high up? Like for example, if we got a buy signal today, would you
Yeah,
be going into buy?
yeah, I would. So if we got a buy signal here, then I would take it. The way that this strategy works basically is what we're doing is waiting for the market to open, which is right here, 6:30 my time, which is when the New York Stock Exchange opens. So when this happens, basically when the first 10-20 minutes happens, you're going to see like a spike of price. So you can see right here, price is moving very slow. It's only moving maybe 100 200 pips, not very much. And then on the first candle, you see the big push up. So see the big push, like 500 600 maybe 700
Yeah,
pips. So right here you see the movement, and what we're doing is we're waiting for the direction to be uh, decided for the rest of the day. Because if you look at the chart, like every time we go from the New York session, so if I mark this right here, this is the New York session. You can see from the New York session, it comes up, But then as soon as it reaches a certain point, this is when the banks enter the market. The banks are like, okay, there's people here, they think it's coming up. So then what they do is they push price down. So that's what we basically did right here. We waited for the banks to make their move, and they put their big order in right here. And then when we see that, we just pretty much ride their back. You know, they're pushing the market, we're just riding with them. And then as soon as it's done moving, we just jump off, we take our profit, we're done for the day. That's basically how the strategy works. So that's why we don't really incorporate the trend, because even right here, see if we were taking this trade here, or if we were looking at this, say if you're looking at this and you don't have the K2 indicators, right? So you don't know the direction of momentum. You just see the trend. This is how most traders trade. So you're trading this right here, and then you look at this from this perspective, and then you see, you know, it's clearly an uptrend, right? So of course, why would you sell if this was the case? You know, it's trending up. There's no reason for you to sell at this point, because, you know, a normal trader would think that it's going to come up. But that's how people get tricked, because they're trading how everybody else is trading. If you're trading the same way everyone else is trading, more likely than not, you're gonna lose, because the banks know this. They know what everyone else is looking at. So you have to trade opposite of everyone, and we trade basically in the direction of the banks, because they're manipulating the market. So we're catching the manipulation with them. So that's why we don't use the trend for this strategy. This strategy is strictly based off momentum. So every time we see a momentum signal that price is going to be swinging downwards, that's when we just, you know, ride the wave with them downwards. This move over here where it spiked up, this was it was a manipulated move too, because of the news that I sent earlier. There was a big order that was placed for Boeing, and they shot price up, you know, very drastically from right here. They shot it up very quickly. And then I already knew that this was a manipulated move, because, you know, someone was trying to make money off this. So I knew people were going to sell off people that made money off it. And that's pretty much what happened here. That's why it shot, you know, all the way down from that point. But that's pretty much how the strategy works. That's why we don't really take into consideration the trend or
The zones.
the zones. I mean, the zones, they actually help, because so like right here, this is an example of how it works, because when the market opened here, we already knew that the last signal was a buy signal, right? So we know that momentum swinging up. So the way that the market moves is, if there's momentum going up, you know, the only opposite direction that it can go is if the momentum ends right here, if it loses its strength, and then the momentum comes back down. So the zones aren't required, but I use them so that I can identify, you know, where is a good entry, because generally if price is going to reject off these zones, so like right here, you see prices above the zone. So I went on the higher time frame, like the 30-minute, and then I saw this big zone right here. So basically, this zone right there was what we were waiting for, because now that we have the zone there, we have something to look forward to. We have something to focus on, because once it reaches the zone, you know, odds are it's going to push up to the zone. And then if it rejects off it and we get a sell signal, you know, momentum is probably going to continue downward. So this is just an extra confirmation. It's not necessary, but it does help, because you have a visualization where the rejection happened and where it's supposed to happen, because we're already predicting the price is going to come up here, reject off here, then bounce off. And then once we get the sell signal, the momentum is going to push down, because you can see right here, same thing happened. If we are looking for an entry here, this is exactly the same entry that we were looking for this same day. So this day over here, 6:30 is right here when the market opened. And then we were doing the same thing. We were waiting for price to come up, reject off the zone, and then followed by sell signal. Because you can see here, when that happens, price comes up, rejects off the zone, sell signal right here. The momentum is so strong that it pushes it all the way down here.
Yeah.
So yeah, basically what we did here. So this is what we were waiting for. We were waiting for price to come up. So you can see price pushes up like this. And you can see it's exactly where I marked it up. It pushes up, and then after that, it starts to come down. See, it pushes exactly, I didn't even know the price was gonna go right here, but I had the pointer there. So price comes up exactly where I marked it, and then it starts to come down right here. We have that sell signal, and then obviously after that sell signal, momentum is going to swing down from there. So if you play that out, it does exactly what we thought, and it comes straight down from there. So that's why I draw the zones in the morning. It's not necessary, but it gives you a visualization, because the thing is, if you don't have the zone here, so say if you're just watching it from, this area, there's no area that you're waiting for price to reject from,
Yeah.
So it just
Draw
makes,
zone.
yeah, it makes it a lot easier. So you're not guessing. Like you actually have the zone drawn where it actually hits.
Okay. So if we got a buy signal, we would take it as
Exactly. Yeah.
well.
So, yeah,
If we got,
exactly.
yeah.
Yeah. So I'll
Okay,
show you
cool.
I think the example for yesterday, I think yesterday was a buy, right? So let me go to yesterday's.
Yeah,
Uh,
yesterday was a buy.
see, we'll go to 6 o'clock over here. Yeah, 6:30 right here. So I'll just rewind to this point. So the same situation right here, it's the same thing that I was, just talking about earlier with regard to the trend. So if you're going to incorporate the trend here, you might have missed this trade, because the way that this is lined up here, if someone saw this trend right here and then they didn't have the momentum indicator, what most people are going to do here is they're going to sell, because they see that it reaches this point. And if you don't have the indicators, you're going to think that it's going to continue down. But for us, we don't get tricked by that, because we have the momentum indicator. Because the thing is, a lot of people, they can't see what we're seeing. That's why a lot of people don't have the same results as us, because momentum is something that's not used very much when it should be used, especially for specific assets like US 30, because it moves directly off momentum usually. When the banks put orders in, they push price up or they push price down. The thing with people is that when they trade, they just look for trend. The trend's not going to dictate where price is going to move, because the trend gets broken every time, you know? So for us, we don't really pay attention to that, because we're trading during a certain time period, the session for New York, when the market's actually very volatile and it's moving up and down very fast. So we want to make sure that we catch the move when it's a real move and not just a fake out, something where it's just, small retracement, small pullback. We want to catch the real move that's being pushed by, a bigger entity like a bank, institution, something that actually has money to back up their move. So like right here, same situation. If you're identifying the trend, you might have missed this trade, because you would have thought that this was going to come down, not up. But since we're not taking the trend into consideration, this is another thing where I use the zone as well. So if I turn on the zones right here, you can see that we have, see this lower zone down here, all the way up to this point, possibly, yeah. So like around here, we have like this zone down here. So if we were waiting for this before it actually came, so if we were right here, the market just opened. So, and I'm looking at the same thing that we just looked at, right? So earlier we have these zones right here. You can see that the last time price tested the zone, it rejected, had a buy signal, and then it shoots all the way up. Same situation right here, price comes down, tests the zone, and then it shoots up. So same thing with what we're looking at right here. We see the rejection down here. The lower the test, the stronger the rejection. So it comes all the way down to the bottom where it's tested over here 2 days back. And then it's followed by, let's see. It's going to take that trade. So like right here, we would take our long position. We put in the parameters 1500 pips both ways. And then if we let it run from there, pretty much goes to, let's see, yeah, it goes to full TP right there. So same thing both ways, just depends on what's the first signal that appears after the market open, because we're just waiting for the momentum push from, the big banks, the institutions, something that's actually going to push the market. So that's basically what we're looking for there.
All right, I got that. Uh, the other strategy I use is the intraday one for 30 minutes.
Okay. Which do you have a pair that you normally look at? We can focus on.
Uh, I'm still new, but GBP pairs, for example, GBP. Let me see which one. All right, GBP. GY. No, sorry, GJ.
All right, GJ. So we'll go over here to the 30-minute.
So for example, here I thought it was gonna go into sell, but it went completely opposite way.
Oh, from here, which let me see.
I was looking at it for sell at 3rd of December. That's today at 3:40
340. So that was
3:40 a.m. New York time.
okay, got you. Oh, so you're looking for this buy right here, is that right? Or the sell?
Actually, I was gonna sell it.
Okay, yeah, for this strategy, it has to, what we need to do is turn on the K2SR indicator. Basically for this, we generally want to have, you want it to match. So if you're going to take a sell here, it would have to match the trend meter. Because for this strategy, what we're doing is we're identifying, yeah, we're identifying the trend, and then we're basically tying the trend with the momentum. So if price is trending up and you see momentum swing up, like something right here, obviously you could take this trade right here since the price is trending up. You can look down at the trend meter, and then we have a buy signal. So
Okay.
if these match up together, it's green and green, then you can generally trade that up like
So
that.
I would ignore the sell signals
Yeah, yeah. So you ignore the sell signals unless the trend meter
unless
down
it's a
here is,
red trend
yeah.
meter.
So right here is an example. So here would have been a sell because you have a red trend meter plus a sell signal. So if it matches right here, red and red, then you can take this
Okay.
short position right here. You place your stop loss at the swing up here, about 36 pips. And then from this point, you can let it run. And then you can see it hits full TP right there, right?
Yeah.
So that's how you would use that. Vice versa, if you're looking for a buy, you're only looking when it's green here. So right here, another example, the trend meter is green, plus you have a buy signal right there. You can enter a long position over here, place your stop loss at the swing, which would be somewhere down here, about 44 pips. And then from that point, you can take your buy position right there, straight to full TP as well. So if you took both of those trades, they both would have hit. Even, this right here, you could have taken another trade. There's a lot to choose from. So this is the basic way to apply the strategy. Another way to apply it, because if you're trading on the lower time frames, you want to know where the zones are, because these zones are going to be important, because if you're trading on the lower time frame, you'll see that price will bounce around a lot more often. So price will go, up and down very fast. So it'll go around, and then it might stop you out. So it might go up, reject off this point, then maybe come down, et cetera. There's a lot of points of rejection. So it's not necessary that you have these zones on the chart, but it is recommended, because you don't want to trade where you might get kicked out of this trade. Like this it would have won, but if you wanted to be careful, you might have skipped it because the zone is so close. So
Yeah. Yeah,
I
I
mean,
remember
yeah,
that.
yeah,
I draw zones, and I remember in the strategy you mentioned that it should be at least 10, minimum 10 pips, right? No, maximum 10 pips away. No, sorry, minimum 10
yeah,
pips away.
minimum, yeah, because you want to make sure that there's enough space for
Yeah.
you to take the
Okay.
trade, so that you don't get stopped out. Because like right here, whenever price gets near a zone, it'll either go up, or it'll either bounce back down. So if you have some cushion, say you have 10 pip cushion, like right here, it's let's see, it's like 40 pip cushion. So you're perfectly fine with this entry right here. But if the strategy, if it's too close, then you might get stopped out. So if it's within 10 pips, so say if we only do, let's see, yeah, so if I change this right here to 10 pips, and if there's a zone right there, just for example, if there's a zone right here, then this might happen where price moves up, and then as it reaches this area, it could possibly reject off it, and then you don't have no space here to move your stop loss, and profit, because you have to cover the spread. Like right now, the spread is like 8 pips, 8.5. So if you're going to take this trade, you have to pay the 8 pips both ways: 8 pips to enter, 8 pips to exit. So if it's more than 10 pips, you might get stuck in this trade. The trade might go negative, stop you out. So you just need to be careful. with those specific
Scenarios.
zones. Yeah, if the zone is too close, it's not necessary, but you know, if you want to be careful, because like for me, I like to be very careful with my trades. I'm more focused um, on minimizing my losses, because since I'm trading a bigger account, you know, even if I take TP1 only, maybe 10 pips, I'm still making like, you know, 100,000 bucks, maybe 100, 500,000 bucks, depending on what my lot size is. Because I know generally your risk is going to be about 3%. So if I'm trading a $100,000 account and then I'm risking, you know, 3%, I'm going to be risking 3,000. So if it hits stop loss, I'm going to lose 3,000. If it hits full TP, I'm going to make 3,000. But if I get stopped out right here at TP1, you know, my account is 100,000 times 1%. I'm still going to make $1,000 profit. So I don't care if I hit TP1, hit TP2, as long as I don't lose. Because if you lose, it's going to set you back. You know, you have to go make that money back. But if you just keep taking maybe TP1, TP2, TP3, etc., whichever one you hit, you just keep adding the profit to your account. Even if it's a small amount, you're going to keep growing your account. And then as your account gets like bigger and bigger, your percentage is going to be worth a lot more as well. So I'm
Yeah.
not sure like what size account you're trading, but you know, normally most traders, they trade with a smaller account. So once you get to a bigger account size, it makes more sense for you to just take maybe TP1, or you know, move your stop loss in profit, so that if this happens where it pulls back, you can guarantee profits instead of, you know, risking more than you can handle.
Yeah. I started with 3,500 and now I'm at 750.
Oh man, oh, because you were like in other groups and stuff, or trading on your
Yeah,
own.
yeah, 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 yeah. Before we started, I went honestly. I went down to 200 bucks, and then I made 500 this week. So
Nice. You made it right back. Yeah. There's a lot of
well,
we have a lot of traders in our group that in the same situation. You know, they were trading with other groups and they weren't doing so well, but then they came to K2 and now everyone is you know, making their way back up in profit. So I'm happy that that's happening with everyone, because a lot of people, they get trapped in a cycle. You know, they trade with another group, they lose money, they never learn nothing, then they just keep losing money, but then they find K2 later and then they make it all back. So it's always a good feeling to see that everyone is making their money back after, you know, running through all of those errors in the past.
yeah, I'm really happy with K2. I have a question though. So if the trend meter is blue, how do I if do I take the trade if it's red or green, or do I ignore the signals if the trend meter is blue?
Yeah, you just ignore it, because like the way that this specific strategy works is that we're just waiting for price to trend in a direction. And then when we see the momentum, like right here, if we see a momentum, we just want to ride the momentum up to TP, and then we jump off the trade, and then we wait for it to happen again for a second
So
entry.
so only the clear signal with green with green and red with red, blue ignore. All right.
Exactly. Yeah, exactly. So that, yeah, that's for the intraday strategy. Um, I mean, there's a lot of other strategies that you can apply, but that's a good one to start with.
I saw the
Me,
pivot as well, and it's interesting, but it
it's a little more complicated. Yeah.
yeah, more complicated. I'm gonna first manage these, and then I'm gonna try the pivot and scalping. I don't
You
like
should, yeah,
scalping.
yeah, don't scalp. It's too stressful. You could lose money
Yeah.
very fast. It's good later once you get good at trading. Like for me, I can scalp if I really need to. Like if I need to make money within a short period of time, I'll scalp. But you have to be on the computer all day. You know, I don't want to do that, because it takes a toll on your health. You're on the screen all day. You're stressed out because you don't know if it's going to win or not. It's not fun very much. I only scalp if I really need to.
I noticed you trade on a 4 hour time frame, but for that I think I need the bigger accounts because the stop loss needs to be higher, right? Like
So
50 pips or more.
Well, yeah, so the stop loss isn't it shouldn't really um matter too much. That's another issue that a lot of other traders are confused with. You should be basing your trade off your risk percentage. So like for me, if I was to take like a buy, even though my stop loss is, you know, 100 pips, if it's 100 pips, then my risk will still be 3%. So if I put 3% here, I'm only risking, you know, 19,000 units. This is going to be equivalent to a 0.19 lot size. So it doesn't matter if my if my stop loss is 100 pips or if it's 50 pips. I'm still risking the same risk percentage. So then my unit size just goes up. So I think this is, I think you might be looking at it differently. You can actually still trade very well on the 4 hour, but you need to calculate your risk rather than focus on the stop loss, because the stop loss is there for a reason, because that's where I think if price passes that stop loss, then that trade is done. But I see a lot of people, what they do is they try to make their stop loss a little tighter. But then what happens is, so say you're entering this trade, I'm going to find an example here, like just an example where it pulls back. So, okay, so like right here, this is one or let me see if I can find one here. Let's see. Okay, so like right here, this is one example. So what happens is a lot of people want to make their stop loss a little tighter. So if I call a position like this, I'll tell people to put their stop loss maybe down here, maybe like 65 pips. But a lot of people, they don't want to put their stop loss at 65 pips. They're like, oh, the stop loss is too far. So they put it over here, maybe right here, maybe 40 pips, because they think that they're saving money. But this is what happens. Generally, what happens is price will come down. It'll actually not put the stop loss too close. I think yeah. So this is where the stop loss. Yeah. So this is what I meant. So the stop loss was going to be right here at 45 or 44. But then sometimes people want to put their stop loss a little tighter, like maybe right here, maybe like 20 pips.
Yeah.
Because they think it's too far. So what happens right there is price stops them out.
Yeah.
And then after that, it goes up to it goes up and then it hits full TP. Yeah. So that's why we have a stop loss there for a reason. It doesn't need to be like your position size can change. You don't have to leave it at a set position size. You should use like a position size calculator. So if you don't have, assume you trade on MT4, right?
Yeah.
Okay, so you might need a different calculator. So let me see the calculator here. This is one calculator that you can use. A lot of people use this, or they use this app called Stinu. So basically right here, you could use position size calculator. You put your account balance. So maybe your account is like maybe 1,000, right? So it's 1,000. You put your risk percentage about 3%. It doesn't matter which stop loss you use. So if you use 100 pip stop loss, it'll tell you right here to use a 0.03. If your stop loss is 50 pips, it tells you to just increase your lot size right here. But it doesn't change your profit. So you see the profit here is $30, right?
Yeah.
So 100 pips, the same thing. You still make 100. You still make $30.
Yeah, I wasn't doing it like that. I was just calculating the lot size.
Yeah, exactly. Yeah. So this is something that you should use because the stop loss shouldn't matter. Your stop loss could be 500 pips. You still make $30. See, it doesn't matter what your stop loss is. 1,000 pips.
Yeah, that's good.
Same thing. So that's just this is one thing that a lot of people aren't taught. Like I'm sure you probably learned from someone, they never taught you to use a risk percentage, because this is the proper way to calculate it. Even in the chat, I see the public chat all the time. People are always complaining like, hey, your stop loss is too wide. And I'm telling them, no, you should be focused on risk percentage, not lot size, because or stop loss, because your profit can still be the same no matter your account size.
Yeah, that's good. No, I didn't know this. Thanks. That's good.
Yeah. So you can still trade on the 4 hour. I think the 4 hour is the best one because it's a lot more accurate. You can see here on the 30-minute, there's a lot of noise. So the problem is you could get caught in a trade sometimes. Like say right here, this was a buy, right? But you might have gone stopped out because there's too much noise in the market, because there's a lot of stuff going on, like news, stuff like that you might get stopped out right here for whatever reason. And then say from this point, it might go and shoot right back into TP. So that's why I've gravitated more towards the higher time frames, because I don't want to be on the screen all day. I also don't want to be caught in these little noise movements in the market where it spikes up and down just to stop you out.
Yeah, maybe I'll move to 1 hour time frame for now, and then slowly move up to 4 hour.
Yeah, definitely. Because I used to trade 30-minute all the time. It was fun. 30-minute, you'd make profit. You would probably make more profit trading 30-minute, but you have to be on the screen like all the
The
time
whole day.
too,
Yeah.
all day. Yeah. For me on the 4 hour, you can see that the 4 hour closes the same time every day. So for me, it closes at so there's a new candle at 6 a.m., 10 a.m. The swap spread happens. So again, now at 3 p.m. in a few maybe 30 minutes, that's the next candle. And then again at 6 p.m. and 10 p.m. So I'm only on the screen maybe 4 or 5 times a day, instead of be sitting at your chart for hours of the day. And then at the end of the day, you're exhausted. You're like, oh, can I do this again tomorrow?
Okay.
So
And on the 4 hour, you would do the same thing, right? The signal matches the trend and just go into the trade.
yeah, you could do the same thing on the 4 hour too. But if you're going to trade on the 4 hour, then I recommend you use the
Zone.
SR strategy, the one that I've been using for, let me see if I can pull it up here. The K² SR zone strategy. That's the one that I use for every signal. But you can still use the same strategy on there. It's just that I think this one is a lot more accurate on the 4 hour. It's this one right here, the K² SR zone trading strategy. This is the one that I use for every signal that I send out. But the thing with this strategy is that sometimes it aligns with this strategy as well. So for example here, let me see if I can find like a trade that we have here. So CAD JPY. So for this right here, actually maybe not this one. I'm going to see, because a lot of these strategies, they all they align with the same concept. So maybe not this.
Before I was learning breakout.
Oh, breakout strategies. Yeah, there's a lot of good ones for that too. Breakout strategy, but so for that strategy, you can use the momentum strategy. Have you looked at that yet? The
No,
K² momentum pullback strategy.
no, I haven't.
So this is actually a breakout strategy right here. The way that this works is it works the same way as the intraday strategy, but it's the opposite. So instead of matching the trend meter and the signal, you're gonna wait for an opposite signal. So you might look for uh, a green buy signal with a red trend meter.
I remember now. I watched it, but it's too complicated for me. I didn't get it. It
Yeah, yeah,
seemed complicated because it's opposite, and then I don't on the red signal I buy, and then it was just too complicated for me.
oh yeah, no, I get you. It's something that once you practice it enough, you'll understand how to do it. But I could show you an example here. It's
All
pretty
right.
free. Um, Let me see where it's trending over here. I just want to see if I could find it. Oh, I'm on the 4 hour. That's why. 30 minutes. Okay. Yeah. So like right here. So in this situation, this is an example right here. So basically, right here, uh, this is where you have the opposite. So you have a sell signal, and then you have the trend meter trending up. So the way that this strategy works is whenever price is trending up, obviously you only want to take, buy entries, right? So when you see a opposite signal, so price is trending up, but you see a red sell signal, this is just indicating that it's going to be a retracement. So it's only going to come down temporarily before we get another buy signal, and then it shoots back up in the direction of the trend. So for this strategy here, when you get an opposite signal like this, what you're going to do is you're going to enter a buy stop, like a pending order, right here at the high of this candle, because like I mentioned, we are waiting for price to come down. And then when your buy stop order gets filled, you're automatically in the trade, and then you catch the breakout upwards. So like right here, if we play this forward, you can see that the order hasn't filled yet, right? Because price is still below your buy stop. So like right here, now it's filled your buy stop, right?
Yeah.
At this point, see, you get the breakout right there with the buy signal. You're already inside the trade. So you're at this point, you're in profit already. You're in profit maybe like 15 pips. So you catch the breakout before it happens, and then it breaks out fully to hit your full TP right there. So this is one way of applying it. Same situation right here. You can you'll have a signal there. You enter a long position right here, and then you let it run, and then it ends up. Yeah, this one might actually we would have my bad. This is my mistake because this wasn't a valid signal. It would have to be a red
It was a
signal.
green candle.
Yeah,
Yeah,
it
yeah.
was a green. So that was my mistake on that one. But that's pretty much how that specific strategy would work. Uh, but yeah, I mean, the thing is, you have to find. I suggest you go through all the strategies, see what you like best, and then
I like the intraday 30 minutes, but I'm gonna move it up to 1 hour time frame, and I like the US 30 opening.
oh yeah, definitely. So those are like, just find one good FX strategy that you like, and then
Yeah,
and then the US 30 strategy, and that's all you need really, because it doesn't really matter because the trades are going to balance each other out
yeah,
over time basically. So like you could apply on the 1 hour, you can see that it's a bit more accurate. Like right here, if you were to take this trade right here, you can see it's not as much noise right here. You can enter a long position right there, stop loss maybe somewhere around there, 45 pips, and then if you let it run, you get the full TP right there.
yeah, perfect.
Yeah.
I think I was making a mistake here because I wasn't matching the trend meter, and I was taking signals even if the trend meter was blue.
Okay, yeah. No, that's a simple fix. That's good that we had this session so that we can clear that up because
Yeah,
it's something that happens with a lot of people. You're not like the only one that didn't get it right away. So it's good that we've cleared this up and then now you know exactly what to do.
yeah, perfect. I have just one last question.
Yeah,
Um, Sometimes I get confused because I pay too much attention to matching the pairs. For example, I expect, for example, euro to be stronger than US dollar, and then if it's too high up, I don't expect it to go any higher, but it does. So should I pay attention to that, or should I just keep following the signals? For example, last night I think you gave a trade, right?
yeah.
EU.
Oh yeah, for EU, yeah.
So for example, it was high up and I didn't take it. I just wanted to see how it works out. And obviously you hit a TP, but uh, like I didn't take it because it seemed that it's so high up. So I have this psychological barrier, I guess, that I'm looking at the pairs and I'm thinking which one is stronger, and should I do that or just keep following the signals and the strategy?
I think you should just keep following the signals because that's like one misconception that a lot of people have. So a lot of people think that forex pairs can be oversold or overbought, but that doesn't
Yeah,
happen because they're paired with another pair. So the U.S. dollar can always be strong against the euro if the euro is weak. So say if the country's not doing so well, this country is doing good. It can go up pretty much forever. There's no ceiling for it. If you're trading like a stock, say if you're trading like one company, a company can only go up so high before it stops. It's too high, then it has to come down. But for forex, it can go up and down for a long time. So there's really no ceiling and there's no bottom. So for US 30, those are stocks. Stocks can only go up so high, and then people start to sell their stock, and they come back down. So that's a different type of asset. So for that, I think you should ignore it for forex because forex is a totally different asset, and that's a mistake that a lot of people make because they like to think of forex of currencies similar to stocks, similar to gold, commodities. Commodities, stocks, gold, those are they have ceiling and floors. For forex, there's no ceiling floor. It can keep going up, it can keep going down. So that's something that you should probably avoid focusing on. But what you can do is you can use correlation. So you can see here from my watch list, I have everything lined up pretty nicely. So I have all of the AUD pairs, they're put together. So if I see AUD CAD, if it's going up, and I see AUD CHF, it's going up, AUD JPY, it's going up, AUD NZD going up, AUD USD, all going up, then that's going to tell me that, it's probably going to keep going up because the AUD is a strong pair at that time. So for our call yesterday, when I called Euro USD and AUD USD, all of the USD pairs, they were going up. So if they're going up, that means that the second pair or the second currency is weak. So basically, I don't know if you knew how this works, but if price is going up like that, that means that this currency, the
First pair is getting
is
stronger and the
stronger.
second is weaker. Yeah.
Exactly, yeah. So that's why we bought your USD and odd USD together and GBP USD together. We bought all of these, all together because all of them were indicating that the US dollar is weak. So that's something that you can take into consideration, but I wouldn't consider, oh, maybe it's too high, maybe it's too low,
Okay. All
because
right.
it's different. If you're trading another asset like this is a dollar index. If you're trading DXY, then oh, sorry, DXY. Yeah, if you're trading DXY, then for this can be oversold and overbought because this is just the US dollar currency. So this can have a ceiling, it can have a floor. But if you're pairing it with your USD, it'll never either stop going up or stop going down. I mean, obviously it'll keep going up right now because we're in COVID. So the US dollar is weak right now. But once COVID is, been figured out, to have a vaccine, then we could see the power go back to the US dollar and then it'll drop back down. So that's one thing that you can
Take
look
into
at,
consideration.
just the correlations, but I wouldn't get too caught up with thinking if it's overbought or oversold, because with forex pairs it just goes up and down. There's no point where it's like, oh, it's reached like $1.20 something, like right here. People aren't going to say, oh, it's reached $1.20, that it's not going to keep pushing up, because
Yeah.
it doesn't work that way, like how it does with US 30. For US 30 is different. Right here, price is at for our zone is like at 30,000, right? This is where it makes sense, because if you look at the price, 30,000 has only been passed like once. Before that, this is a strong point because it has an actual resistance right there. So for something like this, there's actual price point where you should be looking at. Um, and then the same with like something like gold. Like if you're trading gold, there's going to be there's going to be a ceiling because it only goes up so high until it has to come back down. Like, you'd be looking at these price points right here, and then you're like, okay, price reaches this point, it's too high. So that's why you won't take a buy. But it doesn't work the same way with currencies, if you get what I'm saying.
Yeah, I get it. I get it. That's what I was doing. I can tell that with gold and US 30. So I thought that same thing happens with forex.
Oh
Forex
yeah,
pair.
no, definitely, yeah. Only if you're trading like one asset, because the thing with this, these are pairs, so that it's like a seesaw. It's always going up, going down. You can go both ways, so it's never going to, get to a point. It's like, okay, we have to come down from here or whatnot. That's why we don't really analyze it from price. We just go from structures where it's tested before.
Okay. Awesome. Awesome. I have no more questions.
Yeah, bro. Just what I
It's
recommend is
really helpful. I got like three main things: my lot size, so I don't have that psychological barrier with the stop loss, so I can calculate it better. And the trend meter mistake I was making, not matching it, taking the blue trend meter with buy or sell for forex, and yeah, that's
Yeah,
great.
definitely, bro. Yeah, I mean, with more practice and more just more watching, like watching me trade and just practicing on your own, and then running into mistakes, because you're gonna run into mistakes. It's like it's inevitable. It's impossible for you to not make mistakes if you're still learning. So the more you practice, the more you ask questions, the more questions you'll have. So like maybe after maybe a couple of days, couple of weeks from now, you'll get more questions, and then at that point we can get another session going just to clear up anything that you have. But I'm sure you'll pick up on it, because the more and more you practice, you're going to start catching things a lot easier than like what it would be if you were just doing it on your own.
I practiced a lot. Trust me. I had like 35 trades today,
Oh
and they
wow.
were like minus and pluses, and in the end, I'm in profit. But yeah, I'm practicing. I don't play. I don't trade with big lots, big lot size. But when you give a signal for US 30, then it's yeah minimum lot one. But the rest is just small lots. So I'm trying to not blow my account again, and build it slowly, and then that way I'm learning as well.
Yeah, definitely. I know. Yeah, even if you're just trading like a small lot size, even if you're just risking a penny, you're still going to be focused on it because you're still going to have emotion in the trade. So it's good that you're practicing a lot. And once you get more and more confident, that's when you can start increasing the lot size,
Yeah,
and then you'll start making
and
a
have
lot
like
of profit.
3 trades and make awesome money.
Easy. Yeah, that's why for me, I'd rather trade on the 4 hour, and I only take, maybe 3 or 4 trades a day. And then I
Yeah,
still make a lot more profit than these people who trade, like 20 trades a day and they're still in the negative. So
yeah,
the thing that a lot of people don't realize is the more trades you take, but the more risk you take. So you can make profit on one trade, but if you're taking 5 trades, that's increased the risk that you can lose all of those trades and lose all of your money at that point.
definitely, definitely. Especially if you carry away like me.
I know it's normal though. You'll get used to it, and it all comes with time and practice.
Yeah. Well, thanks a lot for your help. I mean, this was awesome.
Yeah, definitely, bro. Yeah, if you have any other questions, always feel free to reach out. I'm always here to help. I want to make sure that everyone is, successful in trading because it's possible. A lot of people think it's impossible, like this isn't a real thing, but I'm an example for everyone that anyone can literally learn this and master it over time.
Yeah, perfect. I'm gonna use this, and I'll get back to you if I have anything else.
Yeah, definitely, bro. Sounds good. It was good talking to you. I'm glad we had the session. But yeah, so I'll catch you probably next week in the live session, and then we'll continue from there.
Perfect. Thanks a lot, Shawn.
Definitely, bro. I'll see you soon.
See you. Bye bye.